Really just for you. All right, good morning, everyone. Kick it off. We've got Ryder Cup to watch here, so let's get going quickly. All right. Rough session on the U.S. markets last night. Took an absolute beating. S&P down 1.6, NASDAQ down 2%, Russell taking it to the deepness again. The Russell put in a death cross about 4 or 5 sessions ago. I'm not 100% sure if we showed it or not, but that seemed to kind of mark the real turning point where the short-term moving average is dropping below the long-term moving average, and so we've really turned to the downside since then. Yesterday's selling in the States kind of came out of nowhere. I mean, it just really, was the market got soft probably toward the middle of the day. In our local market, there's a big selling program, and just started to move in through Europe, and then and just as the States opened, just instantly carried on and never looked like it could bounce. I think that's going to be really worrying for anybody on the long side of the market. Watch today. If we get up considerably, if we can bounce, not considerably, but if we can bounce a little bit, a couple hundred points into maybe the first couple hours of the session, probably be a great opportunity to fade into the afternoon, because they will come to test the downside again in the States. That I can promise you, the markets are too nervous not to test the downside after last night's session. So like we said, nothing really significant, kind of mixed data points yesterday out of the States, but nothing really to kind of lead us to the downside like that. But it was an ugly day in the States, to say the least. All right, in Asia, you can see here we got a little bit of follow through, not huge follow through. The Nikkei, was down at well over 1%. Finished down less than 1% now. Australian market really the only one that had even more than a 0.5% fall besides the Nikkei. And so I think that's actually quite a good result, but I don't think that that's necessarily going to mean that's what we're going to see today. It'll be interesting to see how this plays out, and we see mining stocks again weak in Australia. It seems to be the common theme every day. The developers in China are weak every single day, so kind of a common theme that we're seeing across the board. Going on to the back of that, we'll have a look on the charts of interest on the day, which is the iron ore price, and this is what the average break-even price, so the average cost of production for all of the different major iron ore companies. You can see Cliffs Natural Resources, it's $107 per ton for iron ore, which is just not going to be cutting it at this point, with the price down to $80, and these guys are really dying. You can see how many of the producers, more than half of the producers, are over $80, which is where the price is at the moment. You can see most of the local companies are at the lower end of the production cost. Assur at $64 per ton, Kumba at $59. BHP at $49, and the cheapest of the group is $45. That's Rio Tinto. So something interesting to look out for, and you can see the reason why these iron ore stocks, especially when you look at something like a Kumba, which really derives nearly, I think, 85% or something like that of its revenue out of iron ore. They're so dependent on that the difference between the cost of production and the actual market price at the moment, that every time that you see a few dollar sell off, it's a huge hit to their bottom line. So if these guys were to, if the iron ore price was to come low enough to really kind of test these levels, I think you could really see a bit of a wipeout in some of these stocks, even further than what you're seeing now, and that's why we're seeing this continued sell off in these iron ore companies. Right. No significant corporate action today. We've got ARI and MMI with divvies on Monday. They got ex-div on Monday, so just keep that in mind. If you look at the market data today, we had Japanese CPI numbers that came out in line, as well as food CPI numbers, both dead in line with expectations. We had consumer confidence out of Germany, which is softer than expected. We've got consumer confidence out of France in about 10 minutes. We've got business confidence in Italy at 10, and the States today we've got GDP annualized, we got personal consumption, and we've got University of Michigan confidence numbers. So probably not besides the GDP number in the States, there's not too much to look at, but I think, like I said, markets are probably going to be a little bit nervous today. We could see a little bit of follow through. We're going to watch to see how things play out today, but I've just find it hard to believe that markets are really going to be able to kind of stick their head up ahead of the weekend. All right. Let's kick things off here. We'll start by looking at Bidvest, which is a chart that we looked at yesterday. Unfortunately, I wasn't paying attention to it at the end of the day, and I missed this freaking shorting opportunity, which kills me. You can see that we dropped our level there around 280, maybe a touch higher if you look at it in the way that I'm looking at it here. But I definitely was saying yesterday that 280, you wanted to wait for it to drop. It dropped it convincingly by over 3 Rand. And we're going to take the height of this channel for that to be the downside that we're going to look at, which is 20 Rand. So, let's say, for instance, that we dropped at 282. We'll be looking for a minimum downside target here of 262 and potentially 260. So watch Bidvest now. I think that it could be it could be soft from here. If we get a little bit of a bounce today, probably a decent selling opportunity as long as it doesn't regain to 282. All right, look at Coronation here. You can see we broke out about almost a month ago now. This has been just a drift a whole way up, and we've kind of been making a bit of a rounded reversal here as of late. Yesterday, we finally got heavy in the end of the day. I have no idea why this thing's been holding up so well relative to the market. Banking sector has been pummeled. Mining, pretty much everything's been hammered. These guys haven't performed at all this year. So 42% of their revenues are performance. They're sitting on zero performance fees for some of their major unit trusts. No idea why it's been hanging up here so well. Maybe a little bit of an international buyer from what I hear. But bottom line is we finally saw a bit of a rollover yesterday. We came down close to $100 to test. We're going to watch and see if that 100 Rand level can hold. I think not only is it a little bit of support, as you can see there, but it's a psychological level as well of triple digits versus double digits. So we drop 100. I think we can definitely see some reasonable downside, maybe play a little bit of catch up with the market. It'll be interesting to see how this plays out going forward. They don't have earnings until November, though, so we can't expect to get anything new out of that. All right. If we look at Telkom, you can see here, it came down yesterday, tested, in fact, it tested on Tuesday, tested 50, got below 50 on the intraday basis, closed at 50, and then yesterday we had a nice little bounce off of dead cat bounce off that 50 Rand level. We've fallen hard. We got up to about 63, if I'm not mistaken, 62, 63, something like that. All the way back down at 50 already. This thing's fallen over 20% from the top. Over 20% from the top. So I mean, it's going to be interesting to see how we play around this 50 level. I know that the market was ugly yesterday. This thing ran its ass off, but this is a major level, as you can see there. So watch it around this 50 level. If you're looking for something to play off as support, this might not be a bad option. Obviously, it's a defensive. Sasol, after kind of jumping back and forth into what this chart's actually showing us in Sasol, I think yesterday's action won out at the end of the day. It was on really light volume, but it dropped that major support level nonetheless. And we had been looking, I think we showed a few sessions back at this 615 level. It had just kind of been holding so many times right around there. You can see there we had so many wicks down around that level and just could never drop that level, kept bouncing. Yesterday, finally dropped that level, and we're actually making a bit of a head and shoulder setup here. If we take the height of this channel from 617 to call it 647, we're looking at 30 Rand. So dropping that, let's say we dropped here at 615. Yeah, we could be looking to as low as about 585 on a target here to the drop of this head and shoulder. So just be careful out there. There is some support, obviously, at 600. We've talked about that before. We bounced really hard off that before, but definitely not it was a terrible finish yesterday. Just didn't feel right, and I'm a bit nervous about this thing going forward. So just keep an eye out on Sasol. We've got First Rand here that also dropped support yesterday. We showed this level at 43 the other day. This also looking a little bit head and shoulderish, not classic, but definitely looking a little bit head and shoulderish here. And if we take this into account and we actually play it like a head and shoulder, this thing's got it's got some real downside here. It's got about $4 of downside from the 43 level, so it could take us down to 39 if the head and shoulder actually does play out here in First Rand. All right, everything just dropping support here. Pick and Pay, you can see Pick and Pay. We'll actually back out a little bit longer so you can just see kind of the longer term play that we've been in here. But Pick and Pay obviously has been incredibly resilient. No idea why it's been trading as well as it has. Huge short interest, probably the only real reason. 54 major level. You can see there yesterday we finally dropped out the bottom of it. This is a very simple, straightforward technical setup here. This range was incredibly clearly defined from 54 to 60. We're going to be looking for a target of down to $48 on a breakdown from 54 in Pick and Pay. And then the last chart I'm going to show you is Truworths. Sorry, let's get there we go. Truworths. You can see right here at $66, major level for Truworths. This is right where I'll zoom it in for you a little bit now. You kind of see the long-term setup here. Right down around 66. You can see here we've got two closes right around 66. We bounced really hard the previous time from 66 up to about 77. We're down here testing it again, just really looking ugly on the chart. And I think if we drop here at 66, we're going to be looking for a big downside target down around probably 55 or something along those lines in the short term. So watch this level here closely. If we drop there, it's going to get ugly. I think some of these interest rate sensitive stocks are starting to scream at us. That the rand is going to blow here again. Rand's really looking ugly. I'll show you guys that chart one more time. We'll look at the USD ZAR. Now this is on the daily. So on the daily, we've got to take out, call it 1132 on a closing basis on the US dollar rand. But if we look at the weekly, you can see here we actually broke out already on the weekly from a closing basis. That's at about 1112, so 1110. So bottom line is real continuation pattern happening here. We've got a hellishly bearish chart going on the rand. It's just starting to look really ugly here, and I really think that the rand's probably going to break down here. We're not in a situation for us to do anything different at the moment, I don't believe. So just keep that in mind and in the way that you're playing stocks out there in the next couple of weeks. That's it for